Hello friends, this is Raman Gill with your daily forex market analysis for October 13th, 2016. Just a quick disclaimer before we get started. This is for educational purposes only. If you have questions about your individual investing needs, I recommend you talk to your investment advisor. Let's start off by taking a look at the Forex Factory here for our economic news. The biggest news item today was FOMC meeting minutes at 2 p.m. Eastern, and this impacted the US dollar. So over the last little while, we've been hearing from Fed officials talking about potential interest rate hikes. When the September meeting minutes got released today, we saw a vote of 7-3. And this is actually quite interesting because we had 7 Fed officials that voted to leave the interest rates unchanged, and 3 voted to increase the interest rates. This is important because before we only had one Fed official who had been asking for interest rate hikes. So now it seems like there are more Fed officials in favor of increasing the interest rates. So this is dollar positive, and over the next few weeks we may see US dollar getting strengthened. Prior to the meeting minutes that got released, we did hear some Fed officials talking about it in their speeches. So a lot of the price move was actually priced in. Now we have actually seen the Fed meeting minutes, which also suggests that at this point the lean it has shifted from leaving it unchanged to actually increasing the interest rates. So that is a positive development for US dollar. Taking a look at the economic news for Thursday, October 13 here, we don't really have much in the London session. Going into the US session, major news item here is the unemployment data that's coming out and import prices. We also have crude oil inventories coming out for US at 11 a.m. Eastern. That will have an impact on oil and as a result on dollar CAD as well. Let's move on to the charts here now. Looking at pound US dollar here, today we have seen a push up in the British pound, and a lot of that was because the UK Prime Minister Theresa May agreed to have the Parliament debate the Brexit. That was seen as positive for the UK. However, with positive expectations of interest rate hike, we have seen British pound retreat again. Even though we have a green candle close, we do see a big pin on top of the candle, which shows that rejection of higher prices here. At this point, I'm expecting the price to come down and test these lows, and then finally the low at 120.20 area. So for now, the bias is to the downside, and we are looking to have some sort of a test of the bottom here for British pound. Looking at the euro US dollar here, we did see a big push down in euro today. We saw a bearish close yesterday and then a push down in euro today, and now we're seeing a bit of a pullback here. In terms of our daily bias, we're looking for a further move to the downside. I am looking at this 110.40 level or 50 area for a pullback, and then a further move to the downside targeting the bottom here, 109.50 area right at the bottom here. Looking at the New Zealand US dollar here, we have seen prices decline for the New Zealand US dollar over the last few days, and for today we did see price pull back up and then closed at the bottom of this price level right on 0.7050 area. And now based on this pin bar here, I'm expecting a move to the downside. And in terms of the target, immediate target, I'm looking at 69.50 for New Zealand US dollar. Looking at Aussie US dollar here, we did see price going up and down. So price has been making lower highs and lower lows, and now based on the candle close here yesterday, we were looking for a pullback into this level, which is 75.80 level for a pullback. We did see that pullback, however we did not see a big drop off of that. Looking at this daily chart here, we do see the price holding below that level, which is bearish, and we see a big wick on the candle here as well, which is bearish. So this gives us a bearish bias for Australian US dollar, and we're looking for price to break down below this 75.30 level and then trade back into this range here. So in terms of our target, we could look at 74.80 level as a potential target for Aussie US dollar. So our bias on Aussie US dollar is to the downside. Looking at dollar CAD here, we have seen dollar CAD slowly going up here. We do see price making higher highs and higher lows, which gives us this uptrend here. However, this pair has been a little bit more difficult to trade. We haven't seen big, huge moves here because of the price of oil. Oil has been going up because of the OPEC meetings with Russia and other oil producing countries in Turkey, and they seem to have come to an agreement to freeze oil production, which has given oil boost. Today, though, we have seen a pullback in the oil. So looking at the daily chart for oil, we do see that the price went and tested the high here. We have seen a retrace off of that, and now we have seen a bearish candle close for the day, and we are coming into this support and resistance level at 50 here. And at this point, this looks bearish, so we could see a push up into 50.68 and then a drop. And at this point, we're looking at 49.18 for a potential target here for the oil. This will also depend on how the oil inventories come out tomorrow, because that will have a big impact on where the oil goes. So if oil retreats, we could see dollar CAD pushing through this level. This is the support and resistance level that it has been struggling with for the last few days. And if the oil pulls back, we could see a break through this level. Looking at the chart here, if it breaks through this level, the next target we are looking for would be 13400. So that's the next target. At this point, looks like it wants to push through. Looking at dollar yen here, we see that the price has been struggling with this 104.50 area here. It did breach it for a little bit, and now since then has pulled back a bit. At this point, we need to see either a strong break above this range or a close below here to show us a direction. At this point, the momentum is to the upside. We do have this uptrend here. However, it remains to be seen whether dollar yen will be able to break this 104.50 level, or if we'll see the price retrace off of that and close back into the range. If we see a red candle close here, a solid red candle close, which means an engulfing candle of some sort, we could then see dollar yen drop. But till then, our bias is still to the upside, and at this point we are open in terms of the direction. So even though it's an upward bias, we're looking for either a clean break above this 104.50 level or a close below with an engulfing candle, which will suggest that the price wants to move to the downside. So that's it for the daily market analysis. I will see you in the trade room.